This episode is brought to you by Core, the brand new non-custodial wallet that offers a seamless and secure experience on Avalanche. You'll hear more about Core later in the show.
People are commenting that I have terrible Do you read a lot of the YouTube comments? Because I find them I love trolls. There's people that they're like, this guy has no semblance, he doesn't even know how to speak to the camera. I'm like, I don't know, man. I'm all over the place. I'm looking in my, you know what I mean? I'm not gonna look straight. It's so weird to look straight. It was
like, why is Santiago the unhappiest man in crypto? This guy's never seen a smile. I'm like, what?
It's because guys come down a ton. What are you talking about? Can't you see I'm visibly depressed? No. I love people that's like, so I'm gonna make an effort to look straight in the, literally like a psycho, just look straight in the camera. It's very weird. I don't know. I think I'm socially awkward, and so looking at the camera feels like I'm looking at someone in the eyes, and it's like I don't. Yeah.
I think I think the way that the internet goes is the deepest trolls are on 4chan. The second deepest trolls are probably in the depths of the YouTube comments,
and are definitely crypto. The two Venn diagrams are very much so.
Man, it is the YouTube comments are a scary place. Try not to look at those.
It's a tough crowd to please. So anyways, I'm still going to do this. I don't care. So I'm also not going to get podcast video training.
I'm not crying.
Unless Blockworks wants to send me to a camp and get me a coach to do PR training, which I'm not there in life, then I'm okay. I'm just going to keep doing my thing.
Have you ever used a business coach or an investing coach or anything?
Very briefly, like a Wendy in Billions. But briefly. And I'm a big believer though in therapy and self-care. I think it's one of the best investments I've made, but I've usually just don't use them for business stuff. It's more personal stuff that I wouldn't be able to talk to friends. For the other stuff, what? I just use this podcast as my way to riff and, and talk.
Did you just subtly compare yourself to Bobby Axelrod, Santi?
There is an episode where he does give one of his employees a ledger with loaded with $1 billion BTC. I still remember that scene, but no.
Yeah, or maybe you're more of a who's the person that he hires? Taylor. Maybe you're more of a Taylor.
Oh well, man, I don't know if I should take that as a compliment or not, but
all right, we're moving on. We're moving past that. Santi, vibe check. How are we feeling about the current markets?
I'm feeling pretty hot. I'm feeling pretty good about it. I think increasingly, you always sort of look at signs of a bottom. There's a few that I've observed. The one that I was reading today is this. There's an index that is composed of private market secondary valuations, and that has come down to a point where it is down 28% year to date, which is now below the NASDAQ performance. And I've always felt that there was a time where not just in crypto, but the private market valuations were still very inflated and hadn't corrected. And now they have, at least, this index is not comprehensive, but it does track some stuff. And I think that's a very healthy barometer of okay, we probably, you always look at things that need to be corrected. And this was one that I was looking at. And I think it's sort of a late indicator and an important one for a sign that we've probably bottomed. So inflation seems to be coming down a bit. Obviously, there's risk still. China that is concerning, and the whole Taiwan situation that could be escalating or not. And then Europe and gas prices. Just the energy prices. Europe's pretty much going to go into a recession, I think. So, but that doesn't necessarily concern me. I'm not a macro expert. I observe it. But no, I'm feeling pretty good in crypto. There's a lot to talk about, especially this week. A lot of events since we did the last roundup. So I'm excited.
Yeah. It feels like the last part of the market that hasn't been hit hard is still the labor market, actually. That's pretty... I think there's still more pain to be seen in the labor market, but we've seen a lot of the extent of the actual equities and crypto market pain has been, I think we've seen the bottom there. I don't think we've seen the bottom in the labor market. That's the probably last big thing I'm watching.
Yeah. It was interesting. I think we mentioned in a prior episode, but I think it was Peters who said it. Bitcoin was a leading indicator of risk, and Bitcoin actually, and crypto generally, topped and declined before all the recession concerns. This was November of last year, and if you believe that to be true again, then perhaps crypto is also going to mark the bottom. And then obviously ETH and Bitcoin, general crypto market's up quite a bit since last month, since the bottom, and so that may be a leading indicator.
Yeah. Yeah, I mean, speaking of the labor market, we saw Robinhood do layoffs, second round of layoffs. We saw Gemini did the same thing. They laid off a couple people, a little bit of the workforce. Then they had to do bigger layoffs. So Robinhood, they did 9% cuts in April. Now they just did 23%. So I think I think there's a second round of layoffs coming for companies that didn't dig deep enough. Maybe back in, let's say, June or even July, in the June or July cuts. And so I think that's a big thing I'm paying attention to. Larry Summers, the former Treasury Secretary, I don't know if you saw this. He stated that we need 5% unemployment for 5 years to get inflation under control. That would be a 40% increase in the unemployment rate. So I think that's pretty interesting. I'm curious how you're advising. Are you seeing crypto companies, like what are you seeing from your portfolio in terms of the layoffs?
Well, I thought you were going to ask
I
me
guess
like in terms of deal flow, but in terms of layoffs, not so much.
Yeah.
What I have observed is it is easier so a lot of the companies that I talk to just raise around, so they're in a position of strength to
Right.
actually go out and hire. And they've found that it's a pretty interesting market because a lot of talent comes up and is available. Whereas a year ago, it was impossible to hire like competent people. It was like super expensive and competitive. Now, a lot of folks are looking to go elsewhere, and it's easier for these companies that are just raised around, well capitalized, to go out and hire like really, really good talent, which I think is great.
Yeah.
And so that's what I'm observing. I've also been more active. I track like my average kind of check size. Like my deployment cadence and all the number of deals and dollars at work. That kind of like really took a hit over the last 3 months. I just wasn't seeing good deals. Not so much that the valuation wasn't there. I think there was a lot of these deals kind of came down quite a bit. It was just like, I don't know. I didn't talk to that many teams, even though there were interesting rounds. I wasn't part of many. Now over the last 2 weeks, I've just literally committed to 6 new deals, one of which you actually shared with me, so I appreciate it. But I've seen really good, kind of like a new wave and crop of pretty interesting companies across the gamut of DeFi, gaming, core infrastructure, and so I'm really excited to see that. And good to see founders come to the space and want to continue to build. A lot of these are first-time founders in crypto. We're successful outside of crypto, but are coming in, and that to me has always been a really positive signal.
Yeah. So you wrote 6 checks in the last couple of weeks, or you plan on writing checks into these 6 companies. Are you doing the same size into each of these? Do you size it up based on conviction? How do you think about an angel investment?
I typically have a minimum check size that to me I ask for. Because if I don't feel that I can do that, then to me it just feels like I don't have enough conviction or haven't done enough work. So I try to stay disciplined at a minimum kind of threshold of dollars at work that I want to have. And then that's kind of based on portfolio size and a bunch of other things. Like I sort of think of it as if you're not willing to make a position like at least kind of 50 basis points or 25 basis points or 1% of your portfolio, then you're probably like better off doing something else. So I try to kind of size it like that. It's at least a minimum threshold. There are instances where I've meaningfully like increased that based on conviction.
Yeah. And will you, so like, let's say, okay, so the company that I introduced you to, when you look at something like that, it sounds like you're doing it, by the way. But when you look at something like that, are you saying like, okay, maybe I'll allocate my normal check size, but I have a lowest allocation that I'm comfortable with. If they can't give me the minimum check size I'm comfortable with, it's just not worth it for my time. And what is that? How do you calculate that minimum? Is it 0.25% of your 25 bips of your total portfolio, of your angel portfolio? How do you think about that?
Yeah, look, sometimes I really come across founders that are kind of exceptional that I really want to work with, and I align myself like philosophically, and I'm not hard and fast. I obviously try to push for a minimum, but if I can't get it, like in this case, super late in the process, he's just making it like squeezing me in, and so I'll be very vocal about trying to get the minimum. But if I can't, then at that point, it's like, do I really want to work with this person? And I want to be a part of that journey. And so I kind of like, on certain exceptions, there are certain exceptions where I just say, look, this is a team that I really like and I want to be a part of this story. And I'm fine, like just getting whatever I can get.
Yeah. How do you think about the opportunity cost of doing these angel deals? So,
Hmm.
company we invested in, I think it's going to be big company, but but I also think ETH is going to go up a lot. We've got the merge coming up, right? So it's like the opportunity cost of doing these angel deals that are illiquid too, where like maybe there's not a token coming. It's just I feel like it's higher than ever right now.
Yeah, it's a great question because it's really hard to outperform ETH in the long term. Like
Yeah.
very, very hard. Um, I guess like not all my portfolio is invested in privates. A lot of it is illiquid. A lot of it is in early stage stuff. I just like it. I
Yeah.
feel like that's where I enjoy the most working with teams. But you're right. You have to believe that this whatever company or team you're backing will outperform. Factoring in like applying some sort of illiquidity discount, right, of 20-30%, however much you want to do it, and some sort of hurdle. If you think ETH is going to do 2x, hypothetically speaking, and none of this financial
Yeah.
advice, but hypothetically, if you think ETH is going to do a 2x or a 3x, then you have to clear that hurdle over whatever time horizon and be willing to take liquidity. And so you apply further discount attached to that. And so if after doing all that math, you come out and say, okay, I will outperform, then that's it, right? And the other thing that you obviously need to think about is, look, a lot of times the biggest mistakes I've made and observed other folks do is like you spend 90% of your time building a thesis, doing research, talking to the team, and at the very end you think about allocation and portfolio construction. And that's where most of the mistakes I've made are based where I had faulty portfolio construction, meaning I was too weighted on liquid or illiquid. I didn't really think much about that. It was a great investment, but it wasn't sized big enough,
Yeah.
so it didn't really move the needle. And look, if you think like if I look at my portfolio historically, there have been out of all the winners, I think from a absolute return dollar wise, it's been only a handful that have really meaningfully drove that outperformance. And there were certainly times where it was a great bet, it wasn't sized correctly.
Yeah.
And I think as an investor, I always like to think, look, the odds of me continuing to perform X really go down. Like this sort of mean reversion is very true. And unfortunately, a lot of people in crypto are conditioned to think that a 5x is like it's like a terrible return. It's like, guys, that kind of thinking is very destructive. Because like if you continue to do a 5x, you'll literally be the best investor of all time, the history of the world. Like that's just not going to be the case. And so, anyways, yeah, what I'm trying to say is portfolio construction is equally as important as doing the work and doing the research, like on the particular company. And so yeah, look, it's an evolving kind of criteria and process. It really depends on market conditions. And, for a while, for instance, for the last like 9 months, you probably saw better R&R, better probably risk-adjusted returns on ETH than a lot of private deals that were being funded at like north of 100 million with like no product.
Yeah. Yeah. I am starting to I heard the co-founder of HubSpot talking about his angel investments, and the guy's worth probably hundreds of millions, or actually probably at this point maybe over $1 billion at this point. He's done 100 plus angel deals. He'll write big check sizes. He'll write $250K check. He'll write $1 million angel checks. And his take on angel investing is it's actually, you probably will outperform it in crypto in the public markets. You'll probably outperform your angel investments. Most people will outperform in the public markets just by buying ETH or something like that, or buying a couple of concentrated tokens that you really, really like. But the angel side of things, if you're a founder and you like to build, there's like no better feeling than sitting down with these founders that you've invested in early and helping them out. And also, candidly, there's like a flex, as he talks about. He's like, I was like one of the first checks into Coinbase. Like I made a lot of money, but like that's a flex that goes on the resume.
That's absolutely right. I mean, sometimes it is about that network, and it is about that kind of insight that you can get by talking and being close to founders and teams building. For instance, you might have angeled into, say, a gaming deal, not Axie, maybe it was one that wasn't as successful or not successful at all. But by virtue of you making that investment, perhaps you learned so much about the Web3 gaming space, what was right, what went wrong, why it didn't take off, why the game, like in-game economy was broken. That insight, had you not invested in this particular company, hypothetically, you may that learning you may have never have gotten. And so a lot of times I think, okay, if I want to get smarter in a category, I'm going to deploy X dollars of work. Say I want to learn about, zero knowledge proofs. Well, of course, the universe is smaller, but maybe that's not a good example. So say I want to learn about gaming, right? And so I go out and invest in 5 different companies, 10 different companies. I will deploy kind of 25K checks hypothetically into all of these. And so, okay, you're putting $250,000 of work to learn about a category that you think is going to be massive. So you have to believe the category is going to be huge to warrant this kind of investment as a percentage of your portfolio, whatever that sum is. And it could be deployed into public or private companies, right? Because a lot of folks might be listening, wait a minute, I don't have access to 10 private companies. Well, it's fine. But in crypto, the beauty is there's all these projects and Discord channels that you can join, right? And so you can go out and, for all intents and purposes, every crypto investor right now, whether it's a token or not, is a venture capitalist, is an angel investor, because these are super early stage projects with liquidity. And so anyways, what I'm trying to say is sometimes you're right. You want to get smart in the category, and it's kind of unrealistic to assume that you're going to really pay attention to something if you don't have skin in the game. And so, and the learnings that you can get from being really close to founders, not just investing privately, but also like just buying the token, whatever, and then joining the Discord, because founders are really accessible in crypto. And that gets you ultimately smarter about a category. And so I've always found, and Naval kind of said it best. I think there's an old tweet from him that said, look, as an angel, you kind of have to assume and be comfortable with losing like all of your principal. Understanding that like there might be like 1 or 2 really asymmetric outcomes, but even if you lose everything, it would have been worthwhile to learn and to get access to these founders that are really, really smart.
Yeah. I want to get your take on ETH merge and just and actually Bitcoin for the second half of the year, and then we can jump into some of the news of the week. What is your current allocation, Bitcoin to ETH allocation?
9 to 1.
ETH to Bitcoin.
ETH to Bitcoin.
To Bitcoin.
Yeah. I just see a very clean, compelling narrative and catalyst for Ethereum. And I think the merge is understood, but not necessarily kind of priced in, I think. And don't ask me why. I just have a feeling like I think that a lot of institutions like kind of understand it. But look, the merge has been kind of talked about for so many years. And, every time there's like some commentary from the devs, Tim or whoever, about a potential delay, a lot of people are like, here we go again. This has been delayed for years. I think most people still are discounting the fact that it's actually going to go through. But I think the setup for, and this is for anyone listening here, there was a great episode that we had with Travis. Yeah, Travis. Go listen to that, because I think that really covers it well. And I believe in most of what is discussed there. Look, it's not to say that I don't believe in Bitcoin. It's just, to me, I always think of, okay, what's the catalyst? And there's a very compelling, strong catalyst for Ethereum that I don't think is wholly properly understood by kind of the majority of the market participants out there.
Yeah. Interesting. Do you think it's like a Bitcoin halving event where maybe like the price doesn't actually move that much post halving, but maybe like a year, usually at the halving, like the price doesn't rip at the halving. It's like maybe it takes 6 or 9 or 12 months.
Yeah, it's like 3-6 months after, right?
Yeah. You think we like
what's interesting is like a lot of people, there's always this idea that like Bitcoin halvings, this one, it's like the next Bitcoin halving will be priced in. And historically it hasn't, right? You never have this phenomenon. Look, correlation, causation.
Like tell me the price action of ETH here. Do you think we maybe it's like buy the rumor, sell the news? It's like we kind of rip into the merge, it sells off, and then we kind of consolidate around for several months, and then the merge gets priced in.
I mean, it's like taking out a crystal ball, because I have no idea. I think you become less of a gambler and more of a speculator if you have a longer than 1 year time horizon. So whatever Ethereum does in the near term likely will be correlated, likely will kind of trail if we're continue to be in this macro uncertainty backdrop. Then I think the merge is, while very interesting catalyst, will take a backseat and macro,
Yeah.
macro still is front seat in a lot of markets. They're still jittery. They still trade around, whether Pelosi's going to Taiwan or, gas prices and whatever happens in Europe. And so I think there's earnings season. People are still looking at that, and then everything else kind of moves according to that, which means if you're a patient long-term investor, it's kind of a great setup when you think about it, because this is coming. Whether market participants want to pay attention to it, they're probably going to be really distracted for the rest of the year. And so I always like to think of these moments as like, you can never really play a short game, because you're really going to get carried away. Yeah. Right. And that's where you really mess up. But if you say, look, the merge has been something that is going to be very net positive for Ethereum long term. It will further credentialize the fact that this is a network that can upgrade, that can execute on the roadmap that has been discussed for a long time. And it's very interesting from an ESG narrative, perspective. And then, I think if you see that, then you kind of observe and cost average. Like what I would do, what I'm doing is I always kind of like build conviction and accordingly allocate. It's not that I'm doing it all at once. And I feel good about these entry points over a 2, 3, 4, or 5 year horizon. Like, I don't know, like I hopefully folks listening here, like I'm never in a position to like, when I do liquid stuff, and I try not to do as much because I know I'm terrible at timing it. And we can talk about, like, even someone like Kathy Wood, super sophisticated, I think has one of the best research shops out there, has been really right about calling certain like macro technological trends, whether it's Tesla and, batteries and electric vehicles or genetics, and like stuff like CRISPR and certainly crypto. She punched out a Coinbase literally on the 27th of July, and Coinbase is up almost 100%. Like, so like,
Yeah.
You never. Anyways,
I know an amazing hedge fund that I know that's they're quite successful. They texted me a week ago and said we're putting on a big short on Coinbase. I was like, what are you guys doing? They're like, we're putting on a big short on Coinbase. It's like, I don't know, it's already down a lot. They're like, no, we got it's Absolutely. Like. It was right after the NFT video that they launched, the Bored Ape video. They're like, this is ridiculous. Yeah. Like, they're clearly wasting so much money. Put on a big short, and even the best traders have no idea what's happening in the short term. I will say I am getting very bullish on things right now. I had 2 conversations that have made me rethink what this bear market will look like. I've previously been thinking that this is going to be a long and maybe a deep bear market again. We had 2 conversations with one of the biggest market makers in the world, and then B, the second one was the head of crypto at one of the largest financial institutions in the world. They are both pushing deeper into crypto right now. They are not backing off. They're both doubling down, and I was really surprised to hear that. And even when you kind of push at them a little and probe and see if they're actually doing that, they are leaning into the merge, and they're really excited internally. And that made me think that, it's only 2 conversations, it's completely anecdotal, but that made me think that this bear market might be a little more shallow, a little less intense than I originally thought.
Yeah, hope that's the case. The institutions are coming has been a narrative that has been ongoing in crypto, and we're still here. But you're right. I mean, I do sense a lot of the discussions I've had over the last 2 years are smart investors that haven't allocated to crypto, that see the merge and are tracking it and have done a lot of work over the last couple of years to understand the implications that has on the Ethereum network. So I think people are ready to execute on it, and a lot of them might just be kind of waiting for this to go live, to really go back to their investment committee and say, okay, it's here, let's go.
Yeah. Speaking of institutions, I forgot to plug our conference the last 3 weeks, and our team keeps getting really pissed at me. We are hosting Digital Asset Summit September 13th and 14th. We have a competition going on internally, Santi. Okay. Whoever drives the most tickets using their discount code gets a free dinner. and I want that free dinner. So you can use Yano 250 to get $250 off. There's the plug. Now no one
This
can get
is
mad
in
at me this
New
week.
York or London, because you do both.
This is New York. It's actually really interesting what we've put together. So like permissionless, like very crypto native event. DAS, we have put together an event that kind of combines the macro with the crypto. So we have folks like Rob Leschner and like Amy Wu at FTX and Mickey at Paradigm and Antonio, the founder of DYDX. But then we also have Jurian Timmerer, the head of macro at Fidelity. We have Brent Johnson, Danielle DiMartino Booth, Mark Yusko. Like a really interesting macro crowd. And so it's like, I don't think there's ever been an event that puts, Mike Green and Brent Johnson and Danielle DiMartino Booth on the same stage as like Michael Shalov and Rebecca Reddig and Danielle DiMartino and Rob Leschner and like some of these deep crypto folks. So I think it'll be a really interesting event, actually.
Nice.
Yeah.
That's great.
Yeah. It should be good. Maybe you'll show this time.
Oh, maybe the London one. Or yeah. I won't make any promises given how constrained air traffic is these days in travel, but certainly.
I'm messing with
I think
you.
a lot of the tourism flow is going the other way, which is Americans trying to go to Europe because the euro is kind of really low. But nonetheless, we can be contrarian.
That's true. All right. Now that the plug is out of the way, we can talk about the hacks.
Yeah, definitely. Let's definitely talk about the Solana hack.
Yeah. You want to start with Solana, you said?
Yeah.
Let's start with Solana. We'll also talk about Nomad. I will say people are calling this the Solana hack. I think it should really be called the Slope failure.
Yes.
This was, a lot of people are saying this is the Solana hack. Really? So here's what happened. On Wednesday morning, there's fear started to spread through the Solana ecosystem. Thousands of users started reporting that their wallets were drained without any approval. I think the final number is that over 7,000, I think it was like 77 or 7,800 wallets were hit by. Yeah, we're hit by hackers. Now, it's a relatively small number, like out of 25 million. There are about 25 million users on the Solana network or wallets. So it's 7,000 or 8,000 out of 25 million. But still, that's 7,700 more than should happen. About $5 million were drained. So we'll talk about the Nomad hack. Nomad was 190 million. This was only 5 million. Anatoly, the CEO of Solana Labs, said it looked like a supply chain attack on iOS-based wallets. What a supply chain attack is, for those who don't know, supply chain attacks happen when a hacker basically enters and modifies software by injecting malicious code in a system. The code inserts can be employed to deliver a malicious payload or backdoor malware. In Solana's case, what Anatoly said is that it's possible that a hacker attacked the iOS wallet libraries to extract private keys. I think what ended up coming out today or yesterday is that what really happened there is that this was not a Solana protocol failure, but it was actually connected to Slope, which is a Solana-based wallet. Slope stores their users. I think this is either a theory or maybe it's been confirmed, but Slope stores their user seed phrases in plain text on servers. So what they do is so you've got the wallet app. They were sending user seed phrases to a centralized server that could then be read. Like the phrases were not encrypted, so anybody with access to the specific server could potentially access users' private keys. And I think this really that is a low security standard. It actually makes me concerned. I'm like, I know this is a low security standard. I bet other folks are doing this though. The low security standard probably led to the breach, which gave hackers the ability to acquire the seed phrases and drain funds. So that's the overview.
That's a great overview. I woke up and I was monitoring this like crazy because for a while you didn't know what was really going on. Most of the users were Solana, but there was a few like Ethereum wallets.
There's some ETH ones.
There was some Ethereum ones too. And so you started then, I think there was some really good folks that you should go out and follow when all this goes on. Samson, obviously, he was not as vocal in this time. He was very vocal in Nomad. Adam, what's his name? Korshorin. He was tracking this a lot. I think he talked to a lot of users that had their wallets drained to understand kind of the profile of the user that was being exploited. And over the ensuing kind of like 12 to 16 hours, they very quickly said, okay, everyone here has like used Slope, or imported their private key into Slope. And so that kind of like, it was great to see the developer community come together to kind of get to the bottom of it. Not so great seeing folks really jump the gun quickly and dunk on something like Solana, say, oh, here we go. this is why Solana's crap, and I think that I pay attention to the kind of folks that do that,
Yeah.
because, look, at the end of the day, like, we'll talk about Nomad in a second, but from a sheer magnitude, dollars that have been like lost, I mean, Nomad was orders of magnitude higher. Um, and that was just like Solidity code, like, issue. And so, yeah, look, I mean, I take this opportunity to tell users, like, the most important thing, the takeaway when you see these kind of incidents, hopefully no one was affected, are two things. One, get a hardware wallet. Just don't trade convenience for security. Like, security is paramount. And I don't care what anyone else says, just go get a hardware wallet. If you have more than $100 at work in crypto, go get a hardware wallet. It costs like $50-$60. You'll understand about security. It's not easy to use, but take it as a learning. Like, it's not like super intuitive at first, but then it becomes very easy once you get the hang of it. And I think it's a very worthwhile time and money investment to understand security. Like, if you're bullish on crypto and you really want to start allocating your time and attention and energy and money, like, trust me, it will pay off. Like, it will pay dividends just having a hardware wallet. Get 1, 2, 3, 10. I don't care. Related to this, there's a few accounts that I think we should link here in the notes that I think provide really good security, like, best practices. The founder of, what is it, My Crypto?
We'll put together some stuff. Yeah, Tay did something. Bobby Ong at
Yeah.
CoinGecko did something.
Tay is one of the more, like, very outspoken, like, will not hold back what she thinks, and provides really comprehensive threads about security. And I recommend following her. And so, anyways, that was. I'm glad that we got to the bottom of this pretty quickly, because it could have been way worse, and it wasn't. It wasn't a Solana failure. It wasn't. It was just simply devs not being very cautious and, like, adopting terrible practices and copying libraries and not really understanding what they're doing.
Yeah. So this was a private key. So the private keys were compromised here, right? This was not like a phishing scam. This was not like malicious approval and smart contracts. This was just a private key compromise through these centralized servers.
Yeah, like when you generate a key with Slope, or you import a private key through Slope, they were just, like, storing that in plain text. Like, it's just like, if there's one thing that you need to do as a wallet, like, seriously, is, like, make sure that whatever you do, you just don't store in a third party. Like, this is the most important thing.
Or even if you do store in a third party, which you really shouldn't be doing, they have to be encrypted. There has to be some sort of encryption there. I think they're just storing them in plain text.
Yeah, this is like at the very top of the things that you need to do as a wallet developer, like, and be focused on, is not doing this. And they did that. So it was also, like, pretty disappointing to see their statement. Like, their postmortem was like, it wasn't sufficiently clear to users that they should, if they had created an account, to create a new private key outside of Slope and migrate their assets immediately. Like, this should have been in plain red text, and it was not. And I understand they might be, like, worried about being sued, which they probably will. But still, like, God damn it, guys, like, protect your users. Like, what are you guys doing? So anyways, this is, like, gross negligence in my mind. Like, it's okay. Look, as a developer, there are things that there are other hacks where, like, some of the stuff, the surface area is pretty complex. If you're doing a bridge, like, bridges are very hard. And in this case, I just think, like, whatever it is, just own up to it and protect users. Like, make sure that you mitigate and contain it as soon as possible. And communicating to users clearly and allowing them to kind of take the necessary steps to protect themselves is paramount. And I didn't see that in the press release, candidly. It was like very underwhelming.
Yeah. So I have a maybe a second order impact. I think this is this feels like pretty bullish for Solana, actually. I don't know. Like, there's a crazy amount of adversity that Solana has gone through recently. And it's like, you've got these, like, I feel like a lot of it, like Wormhole, you've got, like, these bridge hacks and like the DeFi app hacks and wallet hacks. You had, like, a lot of performance issues. You had, like, stability issues. The network kept going down. You have these, like, decentralization narratives about how the network's not decentralized. You have all these other L1s like Aptos and Sui arising. A lot of attention being on, like, Cosmos right now and things like that. It's a non-EVM ecosystem, But I'm looking at the price right now. It is still it is still hovering around $40 like for the last 3 months. No, 2 months. This thing is like refuses to go below 35. I mean, maybe Sam's just got like a fat finger bid sitting at 35, but yeah, it's pretty interesting that it hasn't gone down more.
Yeah, there's a very interesting tweet from Raj, one of the co-founders of Solana. It says like this further solidifies the case to have a Solana-based phone. And I'm not an expert on like hardware, like secure enclaves or whatever, but like the idea. Anatoly had a tweet, and we should bring him on to really talk about the Solana phone because I think it would be interesting for users.
He's coming on. It's cool.
Because a lot of this might just like if you think about okay, going forward, like how can we really mitigate these type of things? In some capacity, it's just the hardware device and what you could do if you're interacting on mobile. And so I think it sets us up for an interesting discussion around the Solana phone and why it's actually necessary. And I think this hack further kind of supports that thesis.
All right, folks, this episode is brought to you by our friends at Avalanche and Ava Labs. They have just dropped a new crypto wallet called Core. You're going to be hearing a lot about it over the coming months. You can now be one of the first to try it out. Here's the reason I'm excited to partner with them on Empire. Right now, crypto wallets and browser extensions, they feel clunky, they feel non-intuitive. That's why Ava Labs built Core. It's a free, non-custodial browser extension that gives Avalanche users a seamless and secure Web3 experience across the entire Avalanche ecosystem. Here are a few reasons to try Core. Here's what I'm experimenting with. Number one, Core has intuitive dashboards with a unified display for all of your NFT collections, all your crypto assets. You can execute asset swaps directly inside the wallet. It's a really nice experience. Maybe you want to earn yield or borrow against your Bitcoin, but you don't want to do it on one of those C5 platforms right now. Core's native bridging functionality makes it really easy to bridge your Bitcoin to Avalanche's robust DeFi ecosystem. Last but not least, Core makes on-ramping super easy. You can convert dollars to crypto right now using the MoonPay integration. Just takes a few clicks. Download Core today using the link in the show notes. It's really, really nice. If you are interested in the Avalanche ecosystem at all, you have to be using Core. Download Core using the link below. Now, let's get back to the show. Yeah. All right, should we talk about Nomad?
Yeah.
All right, so I'll do my best to try to explain this, but jump in where I'm missing things. So Nomad is a bridge. Nomad is kind of the bridge for like EVMOs, Moonbeam, Milko Meta, which I don't even know what Milko Meta is, but maybe I should. They were hacked on Monday for over $190 million. Basically, they're cross-chain bridge that supports token transfers across like ETH, Moonbeam, Avalanche. They raised, I think it was $22 million earlier this year from folks like OpenSea, Coinbase, some other corporates, and also some crypto native VCs. What happened with Nomad, and I'll try to do my best here, but again, fill in the gaps, is there was a previous protocol upgrade led to a vulnerability that basically enabled hackers to withdraw an unlimited amount of funds from the bridge. So after this hacker realized this and initiated these large transfers, I think it was like 300 other users copy pasted those transaction scripts, replaced the receiver address with their own, and basically started to exploit it as well. So this was, I think, a smart contract exploit. I think it was Samson explained it like this. I can just quote him because he broke it down way better than I ever could. The bug came from the developers erroneously modifying the bridge's smart contract and deploying the code without proper audit. The Nomad bridge hack, this is the important part. The Nomad bridge hack is made possible due to an improper initialization leading to the zero address, so 0x00, being marked as a trusted root, which led to every message being proven valid by default. So basically what this means is that marking it as 0x00, also called a zero address, accidentally turned off a smart contract check that ensured that withdrawals were made to valid addresses only. So after it was turned off, you could essentially, anyone could withdraw funds from the bridge if they wanted. So it's interesting. Like, this is a lot of money, 190 million. The exploit didn't require any like advanced technical knowledge of smart contracts or anything like that. All you had to do was basically just edit the hacker's transaction with Etherscan, replace the destination address with your own address, and then make the withdrawal request from the Nomad bridge. Yeah, I mean, no, it's when you put it like that, it's like no wonder that there's this feeding frenzy
Hmm.
of hundreds of bad actors here who pulled a total of 190 million out.
There was some folks that were white hacking this, so like they saw this and then they like quickly used the same transaction, modified the withdrawal address, and then kind of
Right.
try to do that to safeguard funds, and then some of
But
them have been
that was
returned.
only nine. So that they did do that. They're white hat hackers, but it was
Yeah,
only
yeah,
9 million. So
yeah.
what
So
was that?
far, yeah,
5%?
yeah,
Yeah,
yeah, yeah. I agree.
yeah.
Um,
Third
yeah, I
biggest
think
hack of the
the
year, right?
what was that?
Third biggest hack of the year, I think. Ronin was
Hmm.
625. Wormhole was 325 or 326. I guess Harmony Bridge was 100 million. There was the Poly network was 611,
Yeah,
but that was different.
yeah. I
So
wanna before we move away from these hacks, I found an interesting use case for NFTs in the Solana, in the what is it no, I don't want to call it the Solana hack, but nonetheless the what is it, the sledge? We should edit this out. The slope.
slope.
I found an interesting use case for NFTs related to the slope hack, which was this: there was a person that sent an NFT that was hosted on on a specific domain to the hacker wallet, and was waiting for them to open the NFT, and then that would reveal the IP address,
Mm.
presumably of the hacker. Of course, if you were monitoring the address and you open it up in your computer, it would have it's not the hacker, but it's an interesting way to triangulate around IP addresses behind a wallet with NFTs. And I think this is in large part why you get a lot of these kind of spam NFTs sent to your wallet that you don't see in OpenSea. But also going forward, you can envision traditional companies imagine saying, "Hey, I want to understand where most of the Bored Apes are," and if you're a high-end business in New York, all of a sudden you understand which wallet, you can retarget these people. And so at the end of the day, NFTs are the cookies of Web3, and I guess it's important to use a VPN all the time if you care about just folks not trying to understand
Yeah.
where you're based.
Yeah, NFTs are the cookies of Web3. I completely agree with that. I think what will end up happening is not just around IPs, but actually just like movement of capital on chain. So
Yeah.
like let's say someone goes through an onboarding solution like a MoonPay or like Kado or something like that. What one of those folks could do is like drop an NFT, basically could like give an NFT to that user once they onboard. And they can essentially, I think what they could do is they could keep, once you're basically onboarded through one of those folks, they can see your movement of capital essentially forever, unless you put it through like a tornado or something like that. They could keep dropping NFTs into your wallet. Once you let's say they see that you've made like 50 transactions inside the Solana ecosystem, they partner with Solana and they drop you like a Solana
Yeah,
50
absolutely.
activity NFT, and then other folks can be like, oh, who owns that NFT? Let me target you. And I think this ends up leading into a Web3 CRM that
Oh, I
will end
mean,
up getting
100%.
built.
So imagine this: pick whatever event that you go. Say you went to a stadium or a music concert, and in that event, you can, middle of the event is scan this QR code potentially to win a sweepstake or whatever. You scan the code, you get an NFT of proof of attendance, if you will. If you're smart, maybe you just want to use a burner wallet, or whatever. Say a subset of users just uses their only wallet, and then all of a sudden, that event organizer, artist, sports company, whatever, now has really interesting data on who
Yeah.
attended, and what the preferences are, what kind of NFTs you're buying. Of course, now it's you can infer so many things just now. Imagine we have limited time of a lot of these users, but really rich data. And at the end of the day, blockchains are data rich. And so
Yeah.
imagine how much more data is going to exponentially rise over the next 10 years of users that just may have one or two wallets, or wallets that can be easily linked through stuff like chain analysis. And look, for a lot of
Yeah.
people out there, it's like, oh my God, this is like Panopticon. This is like Big Brother. Like, this is what you don't want to hear, but it's just a reality, right? And so again,
Yeah.
privacy is one of the things that is important in crypto, but NFTs make it hard.
Yeah. Here's a product request. If there are any entrepreneurs listening to this, is so when we launched Permies 555 NFTs that basically got you access to permissionless and a whole bunch, and our research platform and a whole bunch of other stuff. I manually would go in and look at the address of the people who had bought the Permies, and it tells you really interesting things. You're like, oh, okay, this Permy whale is also like a Doodles whale. So it turns out like we had a lot of folks who hold Doodles who also hold Permies. We had a lot of like Bored Ape folks who also held Permies. We had and it gives you some really interesting insight, because it's like, okay, if you can see that, let's say, I don't know, Moonbirds holders, there's a massive crossover between like Moonbirds and Permies. Well, then you can do a collab that tells us, or our marketing team, that we should then do a collab with Moonbirds, right? Or let's say we see that the Permies holders, there are like no whales, right? Maybe there's just like a bunch of like really, really, really small. Each person has like less than 1,000 or like 1 ETH in their account or something like that. Like you want to market to those folks very differently and talk to those folks very differently than if everyone who holds a Permy has like 50 ETH, for example. So anyone who can like, I think this is a huge platform. I think this Web3 CRM will be really, really big.
Yeah. And feel free to answer this question or not, but you looked at this data. Did you go back to like some of the sponsors or organize and say, hey, listen, the average transaction value of the people attending permissionless is X, and so you better give me a discount on Y, or something like that. I mean, this one
we didn't, but we should have.
Maybe you should just hire me to run your growth hacking. No, I'm kidding. Web3 growth hacking. Look, every time I tweet about this, there are very vocal people that say, God, this is not why we designed Web3. Like, this is terrible. This is the police state, Big Brother. I'm like, guys, it's just a reality, whether you want to see it or not, and whether you want to be cautious or not and take precautions. That's up to you, right?
Bridges. You want to talk Synapse? I want to talk Synapse chain, which I think was a pretty interesting announcement. I don't know if you saw that. Here, maybe it's helpful to have a quick primer on bridges. So basically bridges are, bridges move assets between chains. So like if I want to move some capital from like Solana into Ethereum, that's technically really, really challenging. So I need a bridge to do that. Bridges can be classified into trustless bridges and trusted bridges, right? So the latter means that the bridge relies on a centralized entity to function. The former means that the bridge relies on smart contracts. So for trusted bridges, users need to trust the security and good faith reputation of these centralized custodians. The risks are centralized entities going rogue and kind of this incompetent security management, which we're seeing play out with some of this stuff like Slope. For trustless bridges, users need to trust the security of the underlying blockchain and the smart contracts written on top to enable the functionalities of the bridge. The risks are like badly written code, social engineering, or new vector attacks that were previously overlooked. So that's I think bridges are a really, really, really crucial aspect of crypto as everything goes multi-chain. They're also clearly the hardest thing to build technically. We've had over $1 billion in bridging hacks. But I think maybe one of the problems is that users actually shouldn't be interacting with bridges. I feel like bridges should just be like completely behind the scenes. Nobody ever knows that they're using a bridge. I feel like that's where the future of bridges go.
Yeah, it is. It's pretty hard from at a very high level. You have two different networks, blockchains, if you will, that have different security levels of security. And the bridge is essentially connecting these two, trying to get some finality on the transfer, the state transition of like if you're moving one asset or messaging or whatever generally that is recorded in the blockchain on one side to the other through the bridge, then that needs to be recorded on both sides, which have different levels of security and finality and both from a time perspective and quality of the security itself. And so the bridge is kind of a lot of need to figure that out, which is very complex, and so sometimes require like a trusted, like a system of relayers, if you will, in the bridge that are doing this and taking some risk and being compensated for that. And so that's kind of like, it's probably, as you said, which I would agree, it's one of the more complex things in crypto, at least now, because it has a lot of surface area, meaning like there's a lot of different kind of components that need to work, and it requires a lot of, I think they're kind of like bridges and zero knowledge proofs are heavily researched, but like I would characterize as one of the more kind of ambitious on the roadmap of things in cryptography that need to be figured out. And so, but to your point, I think both are kind of will work at some point or are critical for the
Yeah.
functioning of where at least I see, and I think you see crypto evolving, which is it's a multi-chain world and one that allows for massive scalability through zero knowledge proofs and multi-chain through bridges.
Yeah. There's an interesting bridge announcement was it this week? Earlier this week with Synapse, right? Synapse is launching their, I don't know what you call it, L1 maybe, or smart contract ecosystem. I don't know. You call it, but basically, Synapse is one of the biggest bridges, right? So they're a cross-chain protocol that is best known for they have a Synapse bridge. They also have the bridge consists of the Synapse network and the Synapse cross-chain AMM. They're one of the market leaders right now. So they have weekly volume around like 20 million, I think. It's on par with like Wormhole, which is around 25 million. It's ahead of other bridges like Hop or Stargate. Synapse, for folks who have been around for a while, probably remember them as Nerve. They started as a stable swap AMM on the Binance Smart Chain, which just goes to show you how much folks can pivot. And they really started as like a gateway for moving assets between ETH and Binance Smart Chain. Anyways, why are we talking about Synapse? They are one of the most popular bridges. They revealed earlier this week or end of last week that they're going to be one of the first, maybe the first bridging protocol to actually develop their own smart contract platform. So they're calling it Synapse Chain. And I don't know. I think it's a pretty interesting conversation around. One of the main problems that many teams building cross-chain applications are facing today is the lack of a single execution environment. So instead, what they have to do is they have to deploy smart contracts on like several different chains. This ends up increasing security risks, communication barriers, development needs, etc. Unlike those existing systems and how things are built today, with Synapse's chain, the way I understand it today is it enables developers to build a cross-chain smart contract exclusively on the Synapse chain. So you can basically build apps can get built on the Synapse chain. They can then execute that logic across any blockchain, and then the finality happens on Ethereum. So I think it's pretty interesting. It's compatible with EVM. It enables any existing app to be deployed on Synapse chain. Gives developers a similar building experience to like any other EVM chain, but allows you to build a cross-chain application. I think it's a good development.
They actually reached out to me last week, and we can get them on the pod.
Yeah. I mean, we had the biggest competitor to this is probably Layer Zero. We had Brian on the podcast. The way I understand Layer Zero is this is a very direct competitor to it. Layer Zero raised at a $3 billion valuation, bunch of money, obviously a very hot project. I think Layer Zero competes directly with this. So, interesting.
Yeah.
I will say, Synapse, Blockworks Research had the alpha. I have to plug this. We wrote a piece on this saying Synapse was going to be doing this. We wrote it July 14th and recommended that the Synapse, that like Syn is maybe interesting as Synapse ends up launching their chain. And so, we had the alpha 2 weeks before it was live, and Synapse token did pop 50% on the day it announced. So
how many as an aside, how many guys do you have on your research team?
We have a 8-person research team now.
Okay.
7-person.
And they have like
team.
Any like full liberty to go out and research whatever they want? Or
there's
like a director or whatever?
No, actually, so each analyst, the way that we've set everything up is there's each analyst covers only like 2 or 3 different protocols. And so instead of like, we think other maybe research folks in crypto have made the mistake of being like way too wide, and they try to cover everything in crypto and like, all right, there's NFTs popping up. Boom, we're going to go race and try to cover that. Like we are hyper focused on DeFi right now. And so each of our analysts like just covers 2 or 3 or maybe 4 things. And what like coverage means is like they're in the Discord, they're on the governance forums, they know everyone at the protocols, and because of that, we can give hopefully a lot of alpha through the platform. So
that's great. I'll
get you access if you're a Permi holder. You actually get it.
Oh, there you go. Yeah, I'd love to check it out.
Yeah, cool. I had a thought while reading about the Synapse chain, which is in CeFi, all apps end up converging to become like a bank. So if you look at like So no matter if you start with, there's all these companies that start as custodians like Anchorage and BitGo and Copper and folks like that. Then there's like BlockFi and some of the borrow and lend platforms didn't end up making it too much, but like the BlockFis of the world. Then there's like Coinbase and Gemini. They all basically end up looking like a bank. In DeFi, it feels like everyone is building their own chains. Everyone's building, like Aave launched their own stable coin. Synapse, they started, like Aave starts as a borrow lend platform. They launched their own stable. Synapse starts as a bridge. Now they're launching their own smart contract platform. They have their own AMM. It feels like everyone in DeFi is now starting to like, I don't know the right word. If CeFi converges and everyone creates a bank, DeFi converges, everyone creates an ecosystem, a vertically integrated
decentralized stablecoin that eventually collapsed. No, I'm kidding.
Do you know what I'm saying though?
No, I do. It's sort of like this idea of like, it is common at times to be vertically integrated or horizontally. The thing though is it's hard to make the analogy, I think, because, well, I'm going to say two things. One is in crypto, this idea of composability is really powerful because, you have apps connecting and talking to each other in a very seamless kind of atomic way. You don't have that in Web 2. Like composability is like the eighth wonder of the world, if you will. It sort of obliviates the need. The simple thesis for DeFi is if you look at what Plaid, this company that is, trying to stitch together financial applications. So your one application that you have on your phone, your Bank of America app talks to another app like Venmo, if you will, and be able to do that seamlessly in the front end. And so they try to patch this kind of very disparate, convoluted, complex patchwork of financial applications and services that have been created since kind of the modern age, if you will, Web 2, with the internet and even preceding the internet, okay? It's very bare bones because it's like trying to patch together stuff that will never talk to something that is redesigned from scratch, from the bottom up. They just talks to each other seamlessly. Composability is what makes DeFi amazing and super powerful. And it's sort of like you don't need these kind of like connectors, if you will, there's a lot of friction still. And so that's why DeFi is so powerful. But still, I just, was talking to a company earlier, actually the one that you introduced me to. These guys saying, okay, listen, if you want to build and integrate with DeFi protocols, so say that you're a bank, which it will happen, right? If you're a financial institution, Robinhood or whatever, PayPal or what have you, they want to integrate with DeFi, it's actually quite hard to plug into all these protocols because the documentation's not necessarily there. If there's upgrades from Aave V2 to V3 or whatever, it requires a lot of know-how and complexity to do that. And so that's what I mean by, like, you're still going to probably have these kind of, let's call them middleware solutions, connector solutions that like allow, non kind of Web3 native solutions or maybe front ends like user aggregators to like stitch together and connect to this very composable ecosystem, because it's not necessarily easy for banks to do that or like some other application. So that's one idea. The other thing is, and we've talked about this in prior gaming episodes, which is at the end of the day, maybe what is an interesting phenomenon happening is a lot of games will maybe roll out their entire suite of DeFi and L1. Like something like Steppen, for instance, is now the number one DEX in Solana. Why? Because it has all the users. Like if you look at there's a great tweet, we'll link it in the show notes. But like overnight, well, not overnight, but like because Steppen has become a very popular app via number of users, it is naturally interesting if you're the team to say, why don't we just build our own kind of apps and control the experience for the user, and maybe even go out as far as creating an L1 because, hey, Solana keeps going down or it's not supporting us. So, it keeps breaking, if you will. It's just a virtue of like the amount of demand. And so that's, I think, what is informing a lot of these kind of product choices of these teams that say, hey, listen, it's not kind of tailor-made. It's not fulfilling our needs. And so let's go out and build a DEX or a lending protocol or a stable coin And so, but I would say like the last thing I'll say on this is I don't think we're going to see the same level of kind of consolidation, vertical integration in Web3 generally, even though you've seen companies like, um, Yuga Labs try to do a lot. They built a game and they're going to build other stuff. I still think that I'm still of the mind that there are advantages of using a settlement layer like Ethereum, which is much farther along, much proven, much kind of benefits from what I do think is a network effect of an ecosystem of developers and applications that you can plug into seamlessly or through like EVM compatibility.
I think that's a really good take. Let's move on to another ecosystem announcement this week, which was Magic Eden. So OpenSea is the biggest Ethereum. OpenSea is the biggest Ethereum NFT marketplace. Magic Eden is the top Solana NFT marketplace. They have 90% of Solana's NFT market share. They announced that. So back in April, OpenSea integrated with Solana. Magic Eden just announced that they're integrating with ETH. This raises a really interesting question, which is like, are communities going to be continue to be loyal to their marketplaces? Is this a winner take all market? Magic Eden obviously raised a big $130 million Series A about 2 months ago at a $1.6 billion valuation. This is probably comparable actually to OpenSea's Series B, which was $100 million at a $1.5 billion valuation that they raised exactly a year ago. So it feels like maybe Magic Eden is about 12 months behind OpenSea, but there's some pretty interesting data I've been looking at that is points in the direction of Magic Eden doing well, which is when you look at marketplace businesses and like whether it's Airbnb or Uber or anything, eBay, the most important metric is not actually the GMV, like the gross merchandising value. It's the transaction frequency, because transaction frequencies build user habits. That's much more important to marketplaces than GMV. So I haven't looked at this data in a little bit, but like OpenSea has a much higher gross merchandising value, but Magic Eden has less users and 2 times and more transactions, which means that users on Magic Eden are transacting like, I haven't looked at the data in a little while, but last time I looked, it was like 4 or 5 times as much as OpenSea users, and that's the end goal of a marketplace.
Would you say that is because of like lower transaction fees, or just the type of user that is using Solana is just more active, or the value of what you're, or also a function of like a lot of the Solana NFTs are just in aggregate on average median, whatever you want to see it, is much lower than like the blue chip.
I think there's
Ethereum.
probably 2 things. Yeah, I think there's probably 2 things, which is like if you are in the Solana ecosystem, like you're probably a pretty active user of crypto in general. Like Solana users are probably much more active than ETH users for a number of reasons. And then I think also like the average price point of a Magic Eden NFT is probably like 1/10 or 1/20th of the average price of an OpenSea NFT, I would guess. And so I think this leads to higher frequency of purchases, which then obviously leads to greater user retention, which means more opportunities to step into value for like other areas, right, that the marketplace can build. And I think it was Lee Jin put this, she explained this really well, which helped define my thinking on this, which is like, so Uber's a big marketplace for connecting cars and people, obviously, for transportation. Uber starts as Uber Black, then they expand to Uber X, then they expand to Uber Eats and other product lines. It's like you're basically just, as a marketplace, ramping the frequency of transaction within the marketplace. So yeah, we'll keep an eye on data on Magic Eden versus OpenSea. Anything else, Santi? Any other? Here's another one. I don't have much commentary on it. Michael Saylor stepping down from CEO at MicroStrategy, takes on a new post as exec chairman. Just reviewing the data, they own 130,000 Bitcoin. They bought it at an average price of 30K. Bitcoin's sitting at 23K right now. So what is the, you want to help me do some mental math here? 2 billion. They've got like 2 billion Bitcoin. They bought it for like 3 billion.
Yeah.
No, they've got 3 billion. They bought it at 4 billion, I think is my mental math. So they're down like $1 billion on the Bitcoin trade. That's all I got for MicroStrategy. I guess other news, we'll keep running through this. SEC charged Vorsage founders, promoters in $300 million crypto Ponzi scheme. The CBOE reported a $460 million write-down on the ErisX transaction. Crypto-backed SPACs, PACs, are starting to ramp up spending for the primaries. And yeah, I think that's the news of the week.
Yeah. There was some interesting news that we don't have to all cover here, but like the CFTC came out saying like the regulation of like Bitcoin and Ethereum will squarely fall into their domain. There's been interesting, like we're going to have a great episode on regulation with Rebecca and Jake around these type of topics. So we'll save discussion for then, but there's some really interesting developments. It feels to me like there's a higher cadence of like discussion among regulatory bodies in the US, which to me feels like there's a maturation of like properly kind of understanding these and then regulating these stablecoin kind of act and bill. And I think all of these things ultimately will be net positive, irrespective of kind of the resolution. I think regulators understand that it is the next very interesting arc of innovation, and they don't want to like necessarily just create something that totally shuts down the space. And so there's a lot of development and interesting kind of things that I will foresee will happen over the next 6-12 months that is just interesting to pay attention to, and is a narrative that we'll continue to track closely in the pod and bring on guests that can more eloquently talk about it. What else? There was another interesting. Did we cover Coinbase? I mean, obviously like the stock is up like a ton, but they were chosen by BlackRock. Did we cover that? Should we cover that?
I can give the overview here, which is that there's big news from the kind of institutional crypto world today. Coinbase announced they're partnering with BlackRock. BlackRock is obviously the largest asset manager in the entire world. TLDR on the partnership, institutional clients of Aladdin. Aladdin is BlackRock's investment management platform. Institutional clients of Aladdin now have direct access to crypto trading, crypto custody, crypto prime brokerage, and crypto reporting through a direct integration with Coinbase Prime. I think users have to be clients of both Coinbase and Aladdin, but I mean, this is a huge deal, I would say, for Coinbase. This is really helpful this is an amazing integration for clients of BlackRock and of Aladdin. Like, it's pretty frustrating if you're a private client of someone like, let's say the two big ones like Goldman or JP Morgan. Like, if you are a private client right now of someone like Goldman, you can't hold your crypto with Goldman. You can allocate on their platform to different funds, but you can't actually hold your crypto. You can't trade crypto. You can't. So there are a lot of folks who made a lot of money in crypto. They don't want to bank at like use their checking account that they used when they were in college or something. They want to go be a private client of like a Goldman or JP Morgan, but most of their wealth is in crypto, so they can't actually.
Yeah, absolutely. I mean, this really sets us up for more interesting products, like being able to use crypto as collateral for a number of other things. And it's not just BlackRock. I mean, obviously BlackRock is the largest. It is the largest it is. Money manager in the world at 10 trillion.
What, 10 trillion, right?
It's and the setup there is explosive, I think. Especially not the key things are the custody of it. It's like the full suite of Coinbase that they've already developed. I think that's their biggest moat. Call it what it is, whether margins are down, you don't agree with the management team or they do have this kind of moat of having built like an end-to-end suite of solutions that an institution like BlackRock is probably going to go and use them versus someone else. There was also an interesting development that happened in Europe. BNP Paribas, which is, if not the largest, one of the largest banks in France, also similarly is now going to allow their private clients to support them, like allocating to crypto. And by allocation, I mean like being able to, like, from their platform, you log in, you buy it, and like you see it in your statement, like it's there. I don't think I'm not sure who they're using on the back end. But it's like from a custodial standpoint and what have you. But yeah, these are some of the headlines that kind of go unnoticed during these markets. Most
so
people.
Funny, this Coinbase announcement, if it was a bull market, it is plastered all over crypto Twitter. It's like front page news. It's like just quietly goes by in a bear market.
Yeah,
Yeah.
so I think speaking around that, which I think just to tie nicely kind of the episode is we had the head of research at ARC come on last week, and I think these guys are, in my opinion, one of the best research shops out there, and yeah, they traded out of Coinbase, which they've held for quite a bit of time. Was it 2 weeks ago, week and a half ago?
Yeah.
I think July
Yeah.
27th, they kind of punched out. And now, obviously, the stock's up a ton now, 80, 70, 100%, depending on where things are. It probably moved quite a bit during this recording. So you're left wondering, like, again, we didn't ask them much, but like, why did they punch out of it? And a lot of people are obviously saying, well, you literally took like the bottom. And this is why it's so hard to think on. I don't know what their thesis or if it was like a forced selling situation, they had to just, I don't know the particulars, but what I'm trying to say is I think it's important to kind of appreciate and go back to the original thesis of why Coinbase is valuable, why I think it's valuable, and the moats that it has, and just from first principles, like, should this business be worth X and it's trading out Y?
Yeah.
It's interesting because I think Coinbase and MicroStrategy both will tell you the sentiment around crypto and how far that pendulum is swinging from, Howard Marks has a great quote, and I keep going with Howard Marks because I think he's one of the best investors, which is like, the real world deviates and kind of here. The market is, you add the psychological component and humans not being very rational as species, deviates like this. And so it's like, have fundamentals really changed? And so in the margin, yeah, maybe, right? How much of it's priced in, we're super hard to understand. But at least you can like point to saying, okay, this business has X amount of cash on their balance sheet. It's generating Y, unless I fundamentally think that's going to totally go away. And it's trading at this P multiple, which is like below distressed steel mills. Should this, what is still a technology business that is, synonymous with crypto and one of the largest markets in the world, should it be trading at close to book value, or, like a P ratio of like 6 or 7 or 4? Well, maybe not. And so, yeah, it just is a reminder that they're very smart people looking at these things, and even them, it's really hard to time the market. But yeah, I look at Coinbase and MicroStrategy as like very clear barometers of general sentiment towards the asset class. And I think it was like, again, have we bottomed? I don't know, but like, there was a while there where Coinbase was trading at like pretty distress levels.
Yeah.
So I don't know. You could argue still is, but you guys should go out and do the work.
Do the work. All right, Santi. Good app. You excited for New York, my friend?
Very much so. Assuming I am flying through Heathrow, I believe, and so.
That's bad call. Very bad call.
Hey, listen. It is what it is. I will just. I'm excited to go and meet up with some folks out there. We didn't cover it, but as a punk holder, I will say it will be interesting to see this Tiffany. Let's just end it with this. Tiffany, in our I think one of the sons of Bernard is, has a Bored Ape, I think, as his profile picture, and he's been, very much in the frontier of being pro Web3 and I think developing a strategy for the suite of luxury brands, whether it's Tag, the watchmaker, or Tiffany, the jeweler, or some of the other ones, right? And so in this case, Tiffany unveiled that it was doing 250 pendants. So if you have a punk, there are some folks that were whitelisted, others that are just going to try to buy it up to, there's 250 NFTs, and you can redeem the NFT and get a custom like pendant with some like rare gemstones, if you will, of the punk itself. But you can only claim it within the first, I think, like couple weeks or like months. It's not like you can wait forever. So yeah, it's interesting from, I think it will pave the way and show other luxury brands why Web3 is so important. Because I think LVMH as a conglomerate is by far, in fact, it's my top 3 if I could just own one stock and I don't typically own stocks other than private companies going public in my portfolio, it would be probably LVMH, because humans always want to differentiate. And I think they're the way they've kind of gone after and developed this luxury conglomerate across multiple categories is very impressive. So you're left wondering who's next within their portfolio of LVMH brands. Especially in the backdrop when a lot of sales, they've been hit hard with, the US dollar rising, if you're like a luxury brand based in the US, and or Russia, all of a sudden, like certain brands like Dolce & Gabbana and like that, like we're deriving like 30, 40, 50% of the revenue from Russia. Well, guess what? That just went to zero. And China for a while has been like clamping down on like anti-corruption practices. And so like that also has put pressure on these brands. And so what's next? You always wonder, like, what's next? What's the next? How do you appeal to a younger demographic and capture growth? Well, I don't know. Maybe do what Tiffany is doing. So I think it's a very interesting experiment, whether you like it or not, whether you like the pendants or not. I personally probably will not be shelling out 30 ETH because I don't have a significant other and I'm not much into pendants. But they look pretty cool. I mean, I guess nice, yeah. I will say the only thing that I was thinking was, let me go out and buy a bunch of female punks, because then I think like, I don't know, like, look, it's like it's like a satchel. You remember that scene in the Hangover, which is like he's wearing like a man bag and there's this whole discussion on what it is. And I think don't get me wrong, if you're gonna use man bag, satchel, whatever you want to call it, great. But I'm just not a pendant guy. So I always buy for personal consumption, and this is not something that I, at this point in my life, see myself just wearing.
I'm with you. I mean, this is shout out to Louis Vuitton and LVMH. Like, first off, Bernard Arnault, the French billionaire, dude's worth 168 billion. LVMH owns Dior, Fendi, Marc Jacobs, Celine, Sephora, Tag Heuer,
all the liquor, Tiffany, like some of the best liquor brands out there.
Yeah, and like just I think they're behind El Catterton, like the amazing investment firm. The reason I think this deal went down is he put his son Alexander, 28-year-old, in charge of Tiffany. So it's no wonder that like Tiffany is doing this. Shout out to, I pinged Alexander, see if we can bring him on the pod next time. Yeah. Santi, be well. I'm excited to see you soon in New York.
Thank you. Yeah, likewise. Thanks everyone for listening. And hope stay safe out there. And we'll be back next week.
See you next week.